Hey guys, happy Wednesday morning. It's 7/14/2021. Interesting morning this morning, right? The markets just raced out to big gains, rolled over before lunch. While every across the board went red. Oil had a good start, went a little bit soft. OPEC's come to some kind of agreement on supply. We'll see how that works out. Didn't lose any levels or anything like that. But the markets have been really a strange animal today, right? Futures have been pretty much green all day on your NASDAQ, your S&P, and your Dow. Yet the markets are just fluctuating. What's going on here? What's really going on here? What's what we told you? About inflation. We had our PPI this morning. The PPI is running hot again. Of course, we had Jerome Powell, too, testifying to Congress, and he says that tapering is still off the board, and it's not off the board for a while. The Fed is trying to be reactive and not proactive. You had BlackRock come out today and say that they don't agree. They don't think that inflation is transitory, and we don't agree either. Inflation in its soul, guys, is transitory. It doesn't just you wake up one day and everything's more expensive. It doesn't happen like that. You start getting pockets, right? Maybe your lumber prices, maybe your auto prices, maybe your real estate prices, right? They just start ticking up. Then all of a sudden a big one hits, like your food, right? How about gas prices, right? These things, they always come in like a dominoes. They don't just fall at one time. So by its nature, inflation is transitory. So I don't know why this word has become so important, but it is. And the reason why, all right, I'm going to answer it for you, is because it's placating the market. That's all the Fed is doing right now, is trying to placate the market. And the reason is, if you think about it, if this market goes belly up, the Fed has nothing. The Fed has nothing. Now, right? Maybe you have an economy that's getting into a little bit of trouble after big growth. Inflation is starting to rear its ugly head. You can't raise rates, right? And by the time you start tapering, it's too late. You're already down the inflation road. So we needed a Fed to be a little bit more nimble, a little bit more intelligent about this, and to be more proactive on it. Now, look, guys, I could be wrong. I mean, we could just race off to all ungodly highs and stuff. And you got some certain signals in there that are keeping the potential of that on the table. Apple, right? Apple had a great morning this morning. We'll go take a look at it together in a second here. But, it's just, you have to always have an eye on forward. You can't always be today. And the last thing you want to see is the people that control the money, the people that control the markets and things like that, start living day to day. And that's what the Fed's doing right now. It's living day to day. Every time it comes out, it just placates the market. Then between these little hearings and little Fed meetings and stuff, you hear the stories, right? 6 out of 9 Feds are thinking about tapering at the end of the year. You hear contradictory stories, right? But in those big showroom moments, they're always placating the market. How long can you massage this market? We'll see. And again, we could just go into this economic boom. Inflation could just go away and we could just be rocking the Casbah. But we don't think so right now. So with that said, let's go look at the market. Pop on over to share screen. Let's get this guy over here for now. And, we like Market Watch. We try to see, we do CNBC, but we've told you before, CNBC is all about flash. It's not about giving you the information you need to be successful in your wealth building. You can see here, right? S&P rises to record as the Fed stays the course with easy policy. Apple eats side. Fed Powell says blah, blah, blah. BlackRock's is concerned about inflation. You look at the Oatley, Biden, right? Full-time minimum, Delta. Kramer calls this stock a coiled spring, but you see nothing about the PPI report. Let's pop on over here. Now, on the other hand, Market Watch is giving you 19 dividend stocks with yields of at least 4% that will help you combat inflation, which is going to help you more, right? Now, maybe that inflation head doesn't rear itself, but it's nice to know you're protected, right? And if you look at it, you see articles that are very helpful. So we tend to gravitate to Market Watch. We use CNBC because it's so popular, right? That it keeps all you guys on the same page. But look at this. You scroll down. Where do you see anything about the PPI today? There you go. We're about a quarter of the way down the page, and wholesale prices rose 7.3% in June. From a year ago. So there you go. You got to dig for it, but the information's there. Guys, let's go take a look at some charts. First, let's look at the markets. You can see there the Dow's up about 51, the S&P's up about 10, the NASDAQ just went green again. The small caps are having a little trouble, and the VIX is staying nice and tame. It's back over that 16, but it's staying away from moving towards that $20 level. Oil had a good morning, then it got a little soft after the Saudis and the Arab Emirates came to an output compromise. That'll wash through quick. We showed you that before over the last 5 weeks that we've been in this oil place setup. That these little messages from the Arab Brain Trust, they wash through the market real quick. That's your petulant trade there. But we'll take a look at an oil chart in just a second. That $73 is just really a hold. Gold showing some life this morning. That might be your inflation fears, right? Again, everybody's talking about that 10-year bond, but remember, when I tell you that the Fed is massaging things, this is where the main massage is on that 10-year bond. How much of that is real? I mean, really, how much of that is real when the Fed's buying billions of dollars of that every month? Anyways, let's go look at the crypto market. Crypto's had a rough day yesterday. The Ethereum got under 2,000. Bitcoin was just trading like a dog. And all the undercoins too. For you guys that watch our crypto show, know we just started building a position in Shiba coin, which has given us a nice opportunity. We got some real cheap yesterday. And we're just buying that real slow. We think that thing's going to at some point go to a penny, maybe 10, you know what I mean? Maybe 2 pennies. And that'll get us hundreds of thousands of dollars. You know what I mean? Keep your fingers crossed. Anyways, that's the crypto report. And look, guys, oil at that 73. Let's go take a look at some charts. We'll use TradingView for the charts. Let's move that guy down here for this. And you can see here's your NASDAQ. That's your NASDAQ futures. This is about 10 minutes behind, guys. You can see we started off like a banshee, right? We just came rip-roaring out of the thing, and then we just hit that skids there about mid-morning. And then it bounced back a little bit. Looks like about a Fibonacci bounce there, about 50%. And now it's kind of dwindling back down. That might be your downtrend there. We'll see. The YM, right, which of course is the E-mini, which is your Dow Jones. Kind of the same story, right? Little sell down, little bounce back, a little bit fight going on there. The S&P 500 almost mimicking the chart. Let's go look at the actual action. You can see your NASDAQ today, right? Big gap up, but look where it went. It went right to yesterday's high. It came right back down. There was a little bullish activity, and it's just been down since then. That's a softening market, guys. Same thing with the S&P 500, right? Right up to yesterday's high on a gap down, came down, filled that gap, bounced a little bit. Now it's going sideways. Dow Jones, same thing, right? We've been telling you about the Dow Jones. What is the number on Dow Jones? 35,000. Every time it gets over that 35,000, it just coils right back. There's some reason that the market's not buying this thing over 35,000. Let's go with a day chart, and you can see that even better. Yeah, look at that. Yeah, we hit 35,000 there, and we backed right off. See that wick there? And then we tried it again there, and it failed, and then it sold off like a banshee, and we just did about the same thing. We'll see how the rest of the day shakes out, guys. But really, to sum things up, so what we did was the ET contracts we had expiring on Friday, like we said over the last couple of days, we rolled those into the end of summer, so they're in line with the MRO calls. And we'll let those sit for now. We're very confident about those. We're confident about oil over the next few weeks, but it's a patient trade. The Twitter short, I haven't really been talking about it because it just went into the crapper. Originally, our strategy was to make big money on a short. It turned on us real quick. So then we were looking at it. It didn't make sense to sell at a 90-95% loss, going with still a couple weeks to go on the trade, give it a chance to work out a little bit, maybe resolve itself. But that never happened. But the strategy during that time was, if we did start getting a pullback, we could average into it and get out at a nice, if nothing else, maybe a 30% loss. But the thing just ran away. So we're going to let that thing die in its boots. Sometimes you got to just say, look, this is part of what I teach you guys about being unemotional. Sometimes you're just going to swing the bat and you're going to miss the whole goddamn ball. Dust yourself off, pick up your bat, and get back on the batter's box. And that's what we're doing with Twitter. Now, we got this spider short for Friday, and we've been kind of watching this week, right? It's kind of been teetering, right? It starts to look good. It starts to look bad. It starts to look good. It starts to look bad. We're going to just kind of play this by ear. And at some point on Friday, or maybe tomorrow, depending on after we see these labor reports. Remember, this week was kind of like a domino thing, right? Tuesday, we had the big start of bank earnings and earnings season. We also had the CPI report. CPI report is called inflation, right? The big banks had big profits. You had kind of a tug of war there. Markets ended up closing up green or red yesterday, right? Then this morning, you had the Fed, which just jacked off this market, but you had a PPI number that nobody's talking about, right? And you had the big T word again, transitory. Who gives a F? For God's sake, stop making fucking excuses. Anyways, there you go. I always tell you guys, don't get emotional, and we just want good information, guys. Now look, then we saw the PPI number, right? And the market's just kind of just been going like this, right? So tomorrow we have labor reports. Let's see how those labor reports go. And then on Friday, we'll take a look at this spider short and we might roll it out a little bit. We'll see how things kind of shake out. Markets are kind of fuggy right now. NASDAQ's up about 45 points. The Dow's up about 45 points and the S&P's up about 9 points. So, guys, let's go ahead and call it an update. We'll see how this market shakes out the rest of the day. There's still about 2 hours left in today's market, but we're going to be patient. And I just wanted to close with this, guys. We were looking at the model portfolios that we use online, because one thing about it is with our members, and they know this, we trade everything we talk about. We don't trade your money. We trade our money. And if you look at the last year, that portfolio, all the portfolios we use for different kind of plays and stuff like that, different strategies, they're up 41% in the last year. Now, how do you do that when you had a bad start to the year in options? Well, you got to have your portfolio structured properly. And I'll talk about that more going forward. And I'll have some information on that, how you can get even more information on that. But it's all about how you structure your portfolio so that, it's the old story, guys. I'll give you a little tip here. It's the old story that you always hear. People always tell you, don't put all your eggs in one basket. Don't always stay diversified and stuff like that. That is the most beautiful advice anybody will ever give you in wealth building, besides compounding and stuff. Or an insider tip, right? Martha Stewart. But anyways, it's all how you structure that portfolio. If you structure your portfolio correctly, it will take advantage of every situation, okay? It might not across the board be taking advantage of a situation. It's just like right now, we think this economy is hitting a little bit of a stumble block. We think this market's kind of stumbling, especially the Dow at that 35,000, right? But even if those option plays have been wrong, and they've been wrong this set, right? The spider short, the Twitter short. Really, that's all we got. The last 6-7 options we won option plays in a row, but really that's flat, right? It's a little bit red, but the portfolios are still pounding it. And it's because of the way they're structured and diversified. So don't put your eggs in one basket, guys, and stay a little diversified. Diversification doesn't just mean being in different sectors and different types of stocks. Diversification also means how you structure your portfolio what part of it's in stocks, what part of it you keep exclusive for options, trades, and stuff like that, and how you structure those stocks underneath. Anyways, guys, you guys have a great Wednesday, okay? We'll see how we shake out the rest of the day. We still think 35,000 is the number on the Dow. Let's see if we can get a close over that. If we can get a close over 35,000, that'll probably, we'll start looking at maybe there's another leg up coming on this market, or that might be your last gas. We still think at some point early summer, and we're just about halfway through July right now. So somewhere between now and maybe the first week of August, this market's going to make its last high print for a while. Okay. And we'll see. Everything could turn around and be roses, and we'll be ready for that. And remember, here's the thing, guys. Here's the thing. And this is why we can wait and see and let the market tell us, because our portfolios are structured properly. If the market does, if I turn off this update and the market blasts up 300 points, even with those two shorts in the option plays, guess what? Those portfolios will be rocking. Guess what, too? If this market does roll over, we've got the shorts in there, and we've got the kind of stocks in there that are going to feed themselves. And I'll talk to you more about that. Anyways, guys, and as I say that, the Dow's pushed up to about 56. It's up about 56 at about 349,944. So it's only about 50, 60 points off that 35,000. And like I said, there's about an hour and a half, 2 hours left in the market. Let's see what the market does. Okay, guys. And I'll see you guys for another update tomorrow. Sorry for the little curse word, but that's why we say it's not for children. We're all big boys and girls, but you guys have a great day. Okay, guys. And just kind of keep an eye on things. All right. And structure your portfolios correctly. And have some fun. If investing's not fun, guys, if you're stressing, losing your hair, white hair, things like that, which I shouldn't say that because I'm starting to get some white beard now. I'm 60. I'm going to be 61 in a couple weeks. But so that's not stress. That's old age. That's my story, and I'm sticking to it. Anyways, guys, if you're freaking out every day on the market, every tick and stuff, you're trading wrong. You're building wealth wrong. Okay, you should be just like I am every day. Every day is a new day in the market. Every day is a new opportunity, and we will make mistakes along the way, but we will overall succeed, and we'll do better than the market. All right, guys. You guys go have a good Wednesday. Happy Hump Day.